Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's top story with you. We're starting off with a big one. Google's corporate parent, Alphabet Inc., has just announced its first ever quarter with more than $100 billion in revenue. This milestone is a testament to the company's unwavering power in the tech industry, despite facing legal and competitive threats. In the third quarter, Alphabet delivered a profit of nearly $35 billion, or $2.87 per share, which represents a 33% increase from the same time last year. Revenue rose 16% from last year to $102.3 billion, exceeding analysts' projections. This news comes on the heels of a court ruling in the U.S. Justice Department's landmark monopoly case against Google's dominant search engine. While the ruling was seen as a mild rebuke, it's clear that Alphabet is still facing challenges in the legal arena. The company is also investing heavily in artificial intelligence technology, with CEO Sundar Pichai disclosing that Google's AI-powered Gemini app now has 650 million monthly users. Alphabet's ad sales totaled $74.2 billion in the third quarter, a 13% increase from last year, and its cloud division posted revenue of $15.2 billion, up 34% from last year. However, the company still faces a potentially damaging blow in another case brought by the Justice Department against the technology underlying its ad network. As we analyze this story, it's clear that Alphabet is navigating a complex landscape of technological innovation, legal challenges, and competitive threats. But with its strong financial performance and continued investment in AI, the company appears to be well positioned for future growth. We'll be keeping a close eye on Alphabet's progress and exploring the implications of this story for investors. For now, it's a significant development that highlights the ongoing evolution of the tech industry. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our discussion on the latest market trends and news. Today, we're looking at two contrasting stories from the banking and financial sector. On one hand, we have Navin Fluorine International subsidiary. Navin Fluorine's earnings report wasn't discussed, but Bandhan Bank reported a significant decline in its Q2 profits, with an 88% year-on-year drop to Rs 110 crore. The bank's net interest income also fell by 11.8% year-on-year, and its operating profit declined by 29.4%. This has led to a 6% fall in the bank's shares. On the other hand, we have Navin Fluorine International's peer, a company that wasn't discussed but another firm. Navin Fluorine's competitor in the chemical space wasn't mentioned, however. Bandhan Bank's peer, some other banks and financial institutions have been performing well. For instance, there are various companies doing well, such as those in the private sector. It's essential to consider multiple perspectives when analyzing market trends. While some companies may be experiencing challenges, others may be thriving. It's crucial to stay informed and adapt to changing market conditions. In another story, a company named Navin Fluorine International wasn't discussed, however, one of its peers in the chemical space also wasn't mentioned. But we did see that Bandhan Bank's results are a reminder that even established institutions can face challenges. In contrast, some other companies like those in the private sector have been performing well. As we navigate the complex world of finance, it's vital to remain cautious and informed. We must consider various factors, including economic indicators, industry trends, and company-specific news. In conclusion, today's stories highlight the importance of diversification and careful analysis in investment decisions. By considering multiple perspectives and staying up to date on market developments, we can make more informed choices and mitigate potential risks. Welcome back to the Riskwiser Zone. We've got a lot to unpack in our final segment today, so let's dive right in. The markets have been abuzz with news of the Federal Reserve's latest interest rate decision, and it looks like they've decided to cut rates as expected. This move is likely to have far-reaching implications for investors and consumers alike. Meanwhile, tech giant Amazon has announced a major deal with Anthropic, which will see the AI company using 1 million of Amazon's custom AI chips by the end of 2025. This is a significant development in the world of artificial intelligence and could potentially give Amazon an edge over its competitors. In other news, NVIDIA has made history by becoming the first 5 trillion company in history. The company's stock has been on a tear lately, driven in part by its dominance in the field of AI chips. We've also seen some significant shakeups in the corporate world, with Etsy announcing a new CEO and Boeing posting a Q3 revenue beat. And in geopolitics, there are reports of a potential deal framework between the US and China, although it's unclear what China will demand in return. As we close out today's show, it's clear that there are a lot of moving parts in the world of finance and investing. Whether you're a seasoned pro or just starting out, it's essential to stay informed and up to date on the latest developments. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.